Welcome to InfoJoy Journeys, where we explore the transformative power of literature. I'm Joey, your guide to insights, lessons, and wisdom from the world of books. Whether you're seeking practical advice or a moment of escape, join us on this adventure of discovery. Let's embark on a journey together, where reading is a pathway to a richer, more fulfilling life. Let's get started. Today, I'm going to continue talking about Rich Dad, Poor Dad by Robert Kiyosaki, the #1 personal finance book of all time. In the previous video, I covered the first 2 lessons that Robert learned from his rich dad. These were: Lesson 1, the rich don't work for money. Lesson 2, why teach financial literacy. In this video, I'm going to cover the next 2 lessons that Robert learned from his rich dad. These are: Lesson 3, mind your own business. Lesson 4, the history of taxes and the power of corporations. Let's get started. Lesson 3, mind your own business. What does this mean? It doesn't mean that you should ignore other people's affairs. It means that you should focus on your own financial affairs, and build your own assets. What are your financial affairs? They are the things that affect your income, expenses, assets, and liabilities. They are reflected in your financial statements, such as your income statement and your balance sheet. Your income statement shows how much money you make and how much money you spend. Your balance sheet shows how much money you own and how much money you owe. Most people don't pay attention to their financial statements. They only care about their income, and how much they can spend. They don't care about their expenses, assets, and liabilities. They don't mind their own business. The rich mind their own business. They care about their financial statements, and how they can improve them. They care about their income, expenses, assets, and liabilities. They mind their own business. The rich focus on building their assets, not their income. They use their income to buy or create assets, such as businesses, stocks, bonds, real estate, royalties, etc. They use their assets to generate more income, and to pay for their expenses and liabilities. They use their financial statements to measure their progress, and to make smart decisions. How can you apply this lesson to your life? Start by minding your own business. Pay attention to your financial statements, and learn how to read them. Track your income, expenses, assets, and liabilities. Analyze your financial situation, and identify your strengths and weaknesses. Next, start building your assets, not your income. Look for ways to increase your income, such as asking for a raise, finding a better job, starting a side hustle, creating a product, or investing in the stock market. Use your income to buy or create more assets, such as businesses, stocks, bonds, real estate, royalties, etc. Avoid buying liabilities, such as things that you don't need, that depreciate in value, or that incur debt. Pay off your debts as soon as possible, and minimize your expenses. By doing this, you will be minding your own business, not someone else's. You will be building your wealth, not your debt. You will be following the advice of the rich, not the poor. Lesson 4, the history of taxes and the power of corporations. What does this mean? It means that you should understand how taxes and corporations work, and how they can benefit you or hurt you. What are taxes? Taxes are the money that the government collects from the people, to pay for public services and expenses. Taxes can be levied on income, property, sales, imports, exports, etc. What are corporations? Corporations are legal entities that are separate from their owners. Corporations can own assets, incur liabilities, make profits, pay taxes, sue and be sued, etc. How do taxes and corporations work? Taxes and corporations have a long and complex history, but here are some key points that you should know. Taxes were originally created to fund wars, not to help the poor. The first income tax in the US was introduced in 1861, to pay for the Civil War. The first income tax in the UK was introduced in 1799, to pay for the Napoleonic Wars. Taxes are influenced by politics, not by economics. The tax rates and rules change depending on who is in power, and what their agenda is. For example, in the US, the top income tax rate has ranged from 7% to 94%, depending on the political climate and the economic situation. Taxes are unfair, not equal. The tax system favors the rich, not the poor. The rich have more ways to avoid or reduce their taxes, such as using loopholes, deductions, credits, shelters, etc. The poor have fewer ways to avoid or reduce their taxes, and often pay a higher percentage of their income in taxes than the rich. Corporations are the biggest secret of the rich, not the poor. The rich use corporations to protect their assets, reduce their liabilities, increase their profits, and lower their taxes. The poor don't use corporations, and often work for them or buy from them. Corporations are powerful, not weak. Corporations have more rights and privileges than individuals, such as limited liability, perpetual existence, easy transfer of ownership, etc. Corporations can also influence the government, the media, the public, and the market, through lobbying, advertising, donations, etc. How can you apply this lesson to your life? Start by understanding how taxes and corporations affect you, and how you can use them to your advantage or disadvantage. Next, start using corporations, not avoiding them. Learn how to create and operate a corporation, and how to use it to protect your assets, reduce your liabilities, increase your profits, and lower your taxes. Use your corporation to buy or create more assets, such as businesses, stocks, bonds, real estate, royalties, etc. Use your corporation to pay for your expenses and liabilities, such as salaries, benefits, insurance, etc. By doing this, you will be using the power of corporations, not being powerless. You will be saving on taxes, not paying more taxes. You will be following the strategy of the rich, not the poor. That's it for this video. I hope you enjoyed it and learned something valuable. In the next video, I'll cover the next 2 lessons that Robert learned from his rich dad. These are: Lesson 5, The Rich Invent Money. Lesson 6, Work to Learn, Don't Work for Money. Thank you for watching, and don't forget to like, comment, and subscribe. See you in the next video. Bye.